I want to go back to this thesis of a strong economy and that driving the market up, even in the face of what's going on in Ukraine. One of the things that is a weight on that, obviously, is inflation. We're seeing that some of the highest inflation rates in over 40 years. Gas prices have added to that in the past month. Obviously, I think California is above $5 a gallon on gas. What do you feel like that impact could be in the scenario that you guys have laid out of a strong economy basically driving the market higher in the future?
Yeah, John, I mean, the truth is the economy is not quite going to be as strong as we thought. When we came out with our outlook a couple months ago, we said GDP would be between 4 to 4.5%. Just this past week, we did downgrade our GDP forecast to 3.7%. Will we downgrade it again? We'll see on that front. But let's just remember, last year was 6% GDP. We weren't going to see that again. We're still seeing an economy that's growing. But what are we seeing with the data that's happening? The truth, again, consumer confidence numbers are low. That's what people say. But what are they doing? They're still out there spending. They're still growing. I mean, the airline companies had really positive things to say. People are getting back out there. The negative from energy and the higher commodity prices and crude is one thing, but the reopening, right, getting past the pandemic, what the airlines just had to say is really positive. So these two things are kind of smashing into each other, kind of fighting. But again, the reopening is still something we wouldn't ignore, and people want to get out and spend, and there's still some reasons to think that is going to happen in the second half of this year. Might have to pay a little bit more, to load the car up, take the kids somewhere, or take that airplane a trip. But $3 trillion in excess savings currently for U.S. consumers. There is a cushion to be able to afford, if you will, some of these higher prices. We don't want these higher prices to last much longer than, let's say, 3-4 months. We think inflation is going to come back down. But again, that's the ultimate wild card, isn't it?
Absolutely.
Ryan, obviously there's some headwinds out there as far as the economy is concerned at this point. You guys have said that you still expect, decent GDP growth this year. So give us a few reasons of why you think the economy is still in a decent place at this point.
Yeah, I mean, I kind of talked about some of them. I mean, I guess, already did the GDP where we see 3.7%. But again, I mean, look at what corporate America's saying, right? What's the ground level saying? They're optimistic. They're increasing their guidance. I mean, small businesses are there's an old joke, guys. You've probably settled on this before. Why did God create weathermen? To make economists look good, right? Economists always have the best calls and things. You guys know who does? Small businesses. Small businesses right now are concerned about higher prices and the employment picture, yes. But there are surveys that say small businesses are quite optimistic about the economy 12 months from now. I'd rather follow what small businesses are saying because they're on the ground level, talking to the Americans out there, and they're pretty optimistic. So that makes us feel pretty positive about things, but also just the continued reopening play and the continued just animal spirits of wanting to get out there and help grow this economy. Things we're not willing to bet against yet. And the consumer makes up 70% of GDP. And all in all, the consumer is still in a pretty good place here.
Want more content like this delivered to your inbox weekly? Visit fastest4.com to learn more.